Hi, welcome to this video day, 21st of March, it's Sunday. We're just going to be looking at one of our favourite trade setups today. It's a very simple trade setup. The logic upon which it is based is easy to understand, so you can have confidence when you're trading it. And in terms of the trade setup, it always offers you low risk to high reward. Now, in terms of the trade setup itself, I want to look at it in respect of two pairs. They are going to be USDJPY and Euro CAD. Now, the trade setup itself is based upon a high volatility move, either up or down, where a currency pair gets pushed to overbought or oversold, and then looking for a price stall and looking to go the other way with a contrary trade. I really like this trade setup. Whenever we see it, we'll go for it. And these two pairs look very attractive in our view. So let's go and take a look at them. But just before we do so, please do keep in mind, it is my view as of right now. It can, of course, change in line with the market conditions and action. If you want all our trading techniques and our daily technical sentiment analysis of 14 FX pairs, including the two we're going to look at right now, you can just click on the link beneath this video. You'll get live access to our member center. You can also follow us on Facebook, join our Facebook group of traders, and check out our recommended regulated ECN broker. Right, in terms of trade setups, the first one we will look at will be USDJPY. Right, we're on USDJPY daily, and we kind of base out here at the 103 level, move up, and then we go into an accelerated uptrend up to just around the 109 level. Now, it's a strong move up, but look at the last 5 days. Hardly any volatility. It's about a 60 pip range. So in terms of, from our point of view, we want to go short the USD, but we want to know why the rise and why the stall. Yeah, just want to know what's going on behind the chart. Now, in terms of, I just want to show another chart before I do my levels of entry, stop and target. Where is it? There it is. If you saw my video on the USD, generally yesterday I discussed bond yields. They're really supporting the USD. You can check out that video, but the higher the yield goes, the more attractive US bonds are to investors. That brings money into the US. Obviously, you have to buy US dollars to buy T-notes. This is just one bond contract. Bonds, huge market. Okay, now in terms of, we looked at Japanese bonds of G7 nations, they've got the lowest yield. Okay, so US bonds are much more attractive, and that is why you've seen the USD move up sharply on the yen. Now, what you will notice is last week the note made progress to the upside from 160 to 173, but despite the note going up, the USD couldn't push up on the JPY. Why? I've written it down here. The strength in the note is now creating risk aversion. Okay, and the yen is number one safe haven currency. Okay, so if the note continues higher, the yen will actually bring in money on its safe haven status. Okay, what if it pulls back? Well, the yield differential will narrow between US and Japanese bonds, so I'd still expect a correction in the USD. So yeah, if you look at the bond yields in terms of USD JPY and what they're doing, you see the chart in a completely different context. Now, the other thing I want to look at before I draw my levels of entry, stop and target is, what are speculators doing in USD JPY? So we're just going to shift over and have a quick look, then draw levels of entry, stop and target. Right, we are on a chart which shows big money positioning in the Japanese yen against the USD. Now, this is from the CFTC. It's called the COT Net Traders Positions. It's a totally free tool, and it's very useful in seeing what smart money commercials are doing against large speculators. Okay, now in terms of this chart, first thing I need to mention is that when you have the CFD Net Traders Positions, it's always the foreign currency first. Okay, so we're looking at JPY USD. Obviously, we trade USD JPY, so chart is inverted, but we just want to see what the smart money is doing against large speculators. Now, in terms of the chart, what you'll see here, where I've got my cursor, is speculators are heavily long the Japanese yen commercial smart money is heavily short, and we see the move in favor of the commercials. But what the commercials do, you can see they're covering shorts, they cross over along here, and last week they really piled in the longs as the price stalled. Okay, speculators do the opposite. Okay, they are now basically going short the yen. Now, in terms of the commercial smart money, done full videos on the COT net traders positions, but one thing I would stress is that they're hedgers. They don't lose any money. They're only going to move their positions aggressively when prices move too far away from fair value. And it is aggressive move there. They think the yen is oversold. So do we. So we want to trade USDJPY short. Right, let's go draw levels of entry, stop and target. All right, back on USDJPY chart, and in terms of the technicals, they can be very simple. We know what's going on behind the chart, this big move up here, basically in response to bond yields and also speculators getting hit on stop. But now speculators are heavily long, commercial smart money has sold heavily against them, and the last 5 days we cannot gain traction to the upside and get away from the 109 level. You can see it here, this is a new daily high. This tail can't reach that tail, neither can these two tails here. This tail obviously can't either. So, our view is to go for a short trade. Now, where is resistance? You say there. Okay, that's first level resistance. We don't want our stop behind this level. We want it behind a big level. So I'd recommend behind the 110 level. It's a massive weekly level. There's a huge amount of order flow that will come in up at this level. If the USD did try and take it out, we think it would be very difficult. Of course, it could happen, but we think obviously the USD is going down. If we were to pop above the 109 level, just sell back through 109. Okay, but if we open below 109, there's 3 lower highs, I would be a seller. Okay, now in terms of the speculative long position, we can kind of estimate how far prices would go if those specs exit on stop, and the level I've got in mind is here. This is where you can see it on the chart. It's the 106 level, obviously. Sorry, get my line straight. It's where we came up here, we couldn't get away from the 106 level, we dipped back, big strong blue, then we move sharply to the upside. This elevated bit of the uptrend should be retraced. So in terms of, if we open up about where we are now, you've got a risk reward of about 3 to 1, and I think the probability is pretty good on this trade. Bond yields continue to rise, risk off will kick in, and that could actually really send the USD down against the yen, maybe through 106. If yields ease back, then I think the yen will rally as well. So I like the look of the trade. Right or wrong, decent risk to reward. So we like it, obviously. Now, right, what we're going to do is look at our next pair, which is going to be Euro CAD. Right, we're on the Euro CAD daily chart, and what we can see is the euro fell here. It's kind of a gentle decline, bit of a rally, gentle decline. Then we get through 152, and we really gain traction to the downside. What caused this big sell-off through 152? I've written my notes here. Basically, bond yields in Canada firmed in response to good jobs data. Now, Canadian bonds are a good yield compared to Eurozone. Eurozone fairly poor yield, and it was a really good jobs number. The market before the data came out was looking for about 80,000 jobs added. They got over 200,000, and that good jobs data had the market sort of seeing the Bank of Canada moving forward, being the first major central bank to raise interest rates. We don't think that's going to happen, but I would say potentially the good news is in the price. Okay, so the euro oversold, we'd expect some upside. Potential risk off. If bond yields in the US go higher, safe currencies will gain on risk currencies. Okay, and the euro is, in inverted commas, a safer currency in the market's eyes than the CAD. So risk off would really benefit the euro. So let's just draw some levels. Okay, so you've got kind of the gentle decline, and it kind of falls off a cliff. Where could we rally to? Well, I'm going to do my target there, which really lines up with the round number 152. You can see held it there, pushed up, down, held it again, and then we can't hold it. Okay, so my own view is we should move higher. Now, actually, before I draw this line, let me just show you. Get a little poke on the blue below the 148 level. Yeah, always a lot of order flow around round numbers to keep stressing. No more sellers. Finish reasonably strong. Tail, can't reach that tail or get through 148. That tail holds well above the 148 level, 148.79. So obviously 148 is the first level of support. I wouldn't put it just right behind 148. If you want to trade this one long, I'd be a little bit back, say 147.50 or whatever. You want to be 30 to 50 pips back from a round number in my view. Okay, so what you're looking for is us or the pair to open above 148 and then look for a rally up to 152. That will correct oversold. If we start gaining traction to the upside, you can bring your stop up pretty quickly. So I would say you could bring your stop up. Yeah, this is if we gain traction to the upside. Sorry, let me draw my level in. You can see why I've done this. Bodies, two bodies there. Okay. Body holding the level, body holding the level, go up. Stop can come up behind this tail. Obviously, you can follow the way we do it in the member center. But I think, yeah, probability on this trade is pretty good. Yeah, I like both trade setups. Like I say, you can follow them in the member center if you wish. In terms of this type of trade setup, you get like a really accelerated move the upside or downside, the stall. If you look what's going on behind the chart, you can then decide whether it's worth a country trade or not. Right, that is the video for today. Hope you found it useful. Take care. Have a good day.